We've got a quorum now, so I'll call the Insurance and Labor Committee to order. And would ask Senator Harbison, do you mind to bless us before we start here?
Father God, we thank you for the blessings of this day. Guide our hearts and heads as we contemplate good things for the people of Georgia. In Jesus' name, amen.
Thank you. Okay, we have House Bill 221, Chairman Lumsden. This is a bill, and he's actually got two today, and we've heard both of these bills already, so we won't be taking any public comment or testimony on this, and we'll just ask him to refresh our memory as to what these bills attempt to accomplish, and we'll go from there.
Thank you, Mr. Chairman, members of the committee. Introducing House Bill 221. This is a Department of Insurance bill. Comes as a request of the Insurance Commissioner. It deals with rate filings for automobile insurance. This bill keeps the current file and use model in place for the state mandated minimum filings. And it adds a 60-day waiting period for all other filings. This is a compromise bill that all affected parties have agreed to. It provides adequate time for the department to review the filings and provides a guarantee of speed to market to the insurers. Mr. Chairman, that's the bill. I'll be glad to answer any questions. Appreciate your favorable support.
Okay, and I think Chairman Kirkpatrick, didn't you hear this in a subcommittee maybe, or? Anyway, okay. Well, it's straightforward and simple, so questions, Chairman Harvin?
Yes, sir. Question, am I correct? The minimum limits, if they just have minimum limits, those do not have a file and use status.
The state mandated minimum limits, the process that is currently in place for them remains in place. But what we were seeing we had some companies changing some minimums a little bit and just basically circumventing some of that. So this was an agreement, a compromise that permits the insurance commissioner to have adequate time to review the filings that he needs to review, while making sure that the insurance companies still have their speed to market, which is important to them.
Okay, that's what I remember. Thank you.
Yes.
So we have Weston in the audience with the Insurance Commissioner's Office. Weston, would you like to comment on this? Just, you are in favor of the bill, right? Okay. Thank you. All right, Chairman Kirkpatrick.
At the appropriate time, I'd make a motion to pass House Bill 221, LC 520264S.
All right, have a motion, second from Senator Lucas. Any further discussion? All right, all those in favor of a do pass recommendation, raise your hand. Okay, passes unanimous. Thank you, and we'll go on to House Bill 222, Chairman Lumsden.
Yes, sir, Mr. Chairman. House Bill 222, LC number 520208. This is a department bill also. It comes as a request of the insurance commissioner. It's a it's a bill that clarifies the insurance department's practice in 4 areas of the insurance code. The first change adds language that makes it clear that the insurance department only regulates service contracts that are sold to consumers, to individual consumers, and not to any other entity, not a corporation or a fleet, but only to service contracts that are sold to individual consumers. The second change deals with probationary license, insurance license, and extends the period of a probationary insurance license from 12 to 24 months. The third change deals with reapplication for an insurance license when the license application is denied. This allows the commissioner to let applicants reapply between 1 and 5 years after a refusal. Right now, they have to wait 5 years, so some license refusals or revocations are for less serious reasons than others, so this gives the commissioner discretion in dealing with each case on an individual basis. And the fourth change removes a reference to a code section that no longer exists. 4 items that it's clarifying. That's the bill, and I'll be glad to answer any questions.
All right. And again, this is a bill we heard 2 or 3 weeks ago in full committee. So hopefully you're familiar with it already. And it's a recommendation from the Insurance Commissioner's Office. Any questions? All right, we have a motion.
Mr. Chairman, move to pass House Bill 222, LC 520208.
All right, have a motion to pass. Is there a second? Second, Senator Harbinson. Any further discussion? All right, all in favor? House Bill to pass, House Bill 222, LC 520208. Raise your hand, please. All right, pass unanimous.
Thank you, sir. Committee, appreciate you.
Mr. Chairman, am I to carry these?
That was my understanding.
Yes, sir. I got you covered.
Thank you, sir.
Thank you.
Appreciate it.
Good luck in Senate rules. It's been kind of tough lately.
I believe there are a few of you that might be on Senate rules. I'll be reaching out.
Thank you, Chairman. Wait, Chairman, 1 second. I'm under the understanding that we have passed 60 House bills to your 9 Senate bills in the House. And there's, of course, 3 times as many of you all, but yet we've passed a whole lot more of your bills. So any help you could give us, and
I would simply remind you that as chairman of insurance, every Senate bill that has been sent to me has been acted on and moved on in a timely manner. So there are some things that I don't have direct authority over, as I'm sure you understand, but the message is received and certainly will be relayed. Okay?
well, thank you for your courtesy this morning.
Thank you.
Appreciate you. All right, bye-bye. Okay. Representative Deloach, House Bill 294.
Thank you, Mr. Chairman.
We've heard this also in full committee, and we have in the folder LC 520302S.
Correct.
And you've explained what the changes were to us last time too, so if you would brief us, just
Yes,
refresh
sir.
us on this, and we'll take some
This
action.
is model legislation that comes from the National Association of Insurance Commissioners. It's not a department bill, but the department does support the bill. It deals exclusively with companies that offer products of life, health, annuity, disability income, and long-term disability. It deals with reinsurance contracts when the ceding insurer is placed in liquidation. And basically what it does is set forth the method by which whatever entity steps up to take the place of that insurer that's placed in liquidation, which could be the Guarantee Association, it could be the liquidator, which would be the insurance commissioner. It just depends on the circumstances. Most likely it would be what we call an assuming company, which is a company that would step up and take the place of the company placed in liquidation. Simply gives them the right to continue that reinsurance contract. If they elect not to, it spells out the method by which accounts will be settled up. You determine who owes whom, and how those accounts are settled. And finally, if they're not able to reach an agreement, it sets forth the arbitration process. This is basically something that's designed to help protect the insurance policy holder. It makes it easier for whoever takes over to protect them.
Thank you, Representative. And as you stated in your nice explanation, your first thing you said, I think, is this is the National Association of Insurance Commissioners. It's model legislation
Correct.
that they're recommending that all the states adopt, so that we have uniformity throughout our country with regard to this issue.
Yes, sir. It brings some uniformity.
All right, any questions? What's the will of the committee? Have a motion to pass and a second. Any further discussion? All right, all those in favor, raise your hand. Again, a unanimous vote.
Thank you, Mr. Chairman.
Yes, sir. All right, we'll see you in the Rules Committee.
Thank you.
I think it's me again. All right, has Representative Gamble been able to make it yet?
Chairman, he is across the street. He had come by and indicated he had to present a governor's bill across the street and then be back. So he asked that he could be placed last.
All right. Representative Franklin. House Bill 480.
Thank you, Mr. Chairman, members of the committee. This is a bill that has the full support of the business community, the insurers, claimant lawyers, defense attorneys, and all the groups within the advisory council of the State Board of Workers' Comp. I also have Bobby Potter here behind me if you need to go into more detail. He's willing to come speak a little bit, and also Ben Vinson, the chairman of the State Board of Workers' Comp. But this bill basically, it cleans up the language in regards to potential dependency benefits where there's been a compensable death on the job, and it allows for an increase in max benefit rates for the injured on the job. And I can go into the details of how those change if you like, the number changes, but it's just about
Yeah,
$75 extra.
I think it would be good to go through it a little more than that.
Sure.
Um,
Sure. So the maximum rates for if you get injured on the job that you're completely out of work goes from $750 a week to $800 a week, and then if you're partially out of work, it goes to $483 a week to $533 a week, and then the raise in the max death benefit for a sole dependent spouse goes from $290,000 to $320,000.
all right. And these, these are maximum weekly benefits,
Yes, sir.
and it would vary based on the salary or the wages of the injured employee, correct?
Yes, sir. That's correct.
Yes, ma'am.
We did hear this in subcommittee, and there wasn't really any debate at all about the rates. There were some questions about the dependency section, if you wouldn't mind going through that.
Sure, no problem at all. Well, actually, do you mind if Bobby Potter comes up and gives some more detailed description of that? That'd be okay?
That'd be fine. Representative Franklin, are you a freshman legislator?
I am, yes, sir.
How are you enjoying it?
I'm enjoying it a lot. I like it.
Good. And where are you from?
From Statesboro, Georgia.
Okay.
We got Georgia Southern in my district and the Hyundai plant.
Is this your first bill?
This is my second one. I've got 3, but this is the second one in the Senate committee
Okay. Senate been treating you good.
so far.
Okay. Mr. Potter, who are you representing today? You got about 15 clients, I know. At least, I mean, just,
So today, as you put it, so today I'm really speaking on behalf of the Advisory Council of the State Board of Workers' Compensation, which is a solidly unpaid position. My clients at the Capitol really are not engaged in this part of this process, but I've been involved in that part with the State Board of Workers' Compensation my whole career. So the Advisory Council is about 100 folks who are stakeholders within the workers' compensation system. And as Representative Franklin mentioned, it's stakeholders from all aspects of the system. We participate in helping craft legislation and try to reach an agreement beforehand so that we can avoid legislative squabbles here. So that's part of what this was about. The dependency section that you specifically asked about that I can touch on is on page 2 and 3 of the bill. But essentially it is this: when there's a compensable death on the job, then a wife or a husband who has been ceremonially married is conclusively presumed to be the dependent. That is, they do not have to prove any actual dependency. They just have to prove that they were ceremonially married. That is unchanged. That's on page 2 at line 22. And it's the same with a child. They don't have to prove actual dependency. It's conclusively presumed. And then for years, down at line 40, there was a line that in all cases other than what's described with ceremonial marriage or child, there was a provision for proving dependency benefits. That's the change here. And there's just a few things about that. It makes it clear that someone can be eligible to prove dependency benefits, but they do not have a presumption like in the part above that. So they do not have a presumption, but factually they can prove actual dependency upon the deceased employee. And then on line 45 on page 3, there's a roadmap that shows what that is. So that would be based upon evidence proving the deceased employee provided support of economic value to the claimant dependent, including but not limited to monetary support, sustenance, or housing. So that would be a question for the board. Chairman Benson is here, and that if there were a question about that, it would go before an administrative law judge, and that judge would make a decision about the dependency of a factual dependent. So that's what that change is at the top of page 3. And similarly, there's mirror image in the middle of that for termination of benefits. If there's been a death on the job, there's a spouse is receiving benefits, but if that spouse enters into a relationship similar or akin to marriage, then those benefits could be suspended. So that's a mirror image of the language at the top about dependency, and that's what it does.
All right, go ahead, Chairman Kirkpatrick.
Just one more question, and I think you already answered this in subcommittee. This was also widely agreed to at the advisory council
Yes,
among
ma'am.
all the parties?
Yes, ma'am. In fact, there were, I'm not sure how many Zoom calls that involve folks on both sides to reach agreement on each aspect of this dependency. And then some folks would go back to their respective groups and then come back and want a different word change. So yes, it has been agreed upon.
Mr. Chairman, if I could, I used to serve on that advisory council as a physician, and it's a process that frequently does not end in agreement between all the parties, and so the fact that it has is pretty strong in my book.
Thank you, Chairman. All right, Senator Merritt, you have a question? Or
I do. Thank you, Mr. Chairman. So benefits aren't paid to individuals living together akin to marriage. And where I'm going with this, we have alternative families now, LGBTQ families. So in this description, is that covered, or you tell me how that piece is addressed? Because we don't necessarily have a family that fits this model all the time.
So this
Tell me if I'm
language,
thinking about it right. Yeah, go ahead.
the language in all other cases would include all other cases
Okay.
where there is actual dependency, and the board can determine whether or not there's factual dependency in that case. And that really is at line 40. It's in
That's what I was
all
looking.
other cases.
Okay.
And there were some appellate court cases through the years that dealt with meretricious relationship for folks that were living not ceremonially, and that's why that next line is in there. That includes the dependent living continuously and opening in a relationship similar or akin to marriage.
Okay.
It includes that, so it doesn't rule it out,
Okay.
but the relationship you just described would likewise be included in all other cases.
And that's what I wanted to make sure that line 40, 42 was inclusive of what I was asking, my question. Did it cover?
It is, and it would be a factual determination by the administrative law judge and by the board in the totality of all circumstances.
Okay, thank you.
Yes, ma'am.
And Mr. Bobby, it actually it looks like to me it's giving the board and the administrative law judge a little bit more guidance of the criteria to look at when making that determination. So instead of it just being totally subjective, it spells out some things they should look for to determine whether they're deemed a dependent or not, correct?
Yes, sir. It does. It previously just said with, in accordance with the facts at the time of the accident, and now it spells out a roadmap.
Okay, thank you.
Yes, sir.
All right, Chairman Cowsert?
Thank you, Mr. Chairman. One thing I enjoy about looking at these kind of amendments is it forces you to look at the underlying law to a degree as well. On line 48, when you're looking at this dependency issue, even if you're not legally married now, it says that it shall only be allowed if the dependency existed for a period of 3 months or more. That seems like a very short period of time to establish a committed relationship. I mean, you know, I've dated a lot of people for less than 3 months, and I thought I was committed, but moved on, you know.
Right.
So, have you thought about that being
Yep.
6 months or something that would be more?
Yes, sir, Chairman
Committed?
Cowsert. And I'd heard a line after that some folks said it was 3 months, but it seemed like a lifetime. So it could go both ways. But my response to you would be, this part has been in the law for a long time, is unchanged, and it reflects dependency with or without regard to that particular kind of relationship. But that somebody had asked the question earlier about gaming the system, because, gosh, it's just 3 months. But the truth is, somebody has to die for this to be applicable in the first place. So it can't be like, let's get together, and for 3 months, then benefits will be available. One of those two has to die on the job. So it really can't be gamed from that perspective. And this minimum threshold of 3 months has been in the law for a long, long time, longer than I've done this stuff, and I've done it a long time.
Thank you.
And again, that's just one of the criteria now
Yes, sir.
in this new language. So it's not, just because they've lived together 3 months, it's not a presumption. They've got to look at all the circumstances surrounding that.
That's right.
I had the same concern until I feel like this is actually tightening it up. And then we had Chairman Harbison.
Actually, Mr. Chairman, I believe Senator Cowser dealt with my concerns, but I also, the tightening up, with a kind of a guidance, kind of overview, that 90 days or 3 months is hard and fast, or in its wisdom, the person contemplating this or adjudicating this will say, well, we think it's enough to go ahead and approve it anyway. Is that kind of thing that happens, or is it just 90 days, you're out?
No, sir, that is the minimum. It would be at least 3 months. But that, as the chairman indicated, that is one of the factors that the board will look at in the totality of circumstances.
Okay, thank you.
All right, our subcommittee chair that heard this, I think she wants to make a motion.
Yeah, at the appropriate time, Mr. Chair.
Just hit,
Okay, move to pass on House Bill 480, LC 365495.
all right. And then I have a second from Vice Chairman Harbin. Any further discussion? All in favor, raise your hand. Another unanimous passage. All right, best of luck,
Thank you,
Mr.
Mr. Chairman.
Freshman, in your
Committee.
Rules Committee.
Thank you, sir. And I was hoping you would carry this. Would you be willing to carry this, or?
I will either carry it or help you find somebody to carry it.
Yes, sir. Thank you, sir.
Yes, sir. All right, Representative Gamble has arrived. And appreciate you doing good work for the governor. Hope you were successful. I'd hate to see you lose your job over there.
I appreciate that, Chairman. I was, and I appreciate you helping me go towards the latter part of your meeting, so which bill would you prefer me to start on?
279. I
Okay.
do want to say that, and this won't influence the way I treat you in here or anything, or the vote. I mean, this might be a hard vote, but I have known Senator Gamble's family a long time.
Yeah.
I mean, Representative Gamble, Leader Gamble,
Yeah,
and known him a long time, and hope your parents are doing well.
they are. I
So,
appreciate that. Yours as well. We go way back.
Yes,
That's
sir.
a lot of history there.
Yeah. Well, thank
Good,
you.
good history too. So.
Go ahead.
Well, thank you all for the opportunity to present today. House Bill 279 is one that you have seen before. Senator Robertson carried the same piece of legislation, and basically what this bill does is it acknowledges a level of construction that's called fortified construction. We went over to a home that was built to this standard in Floyd County back about 2-3 years ago now. And it can be built with any material, so it's not material specific. The home that we happen to be at was built with concrete, and we stood inside the home. It was a 3-bedroom, 2-bath house, and you could not hear the traffic passing outside because it was so well constructed to this fortified standard. But more importantly, it is more resistant in that particular area to tornadoes, which are prone to come through where it was constructed. And so what the legislation does is it would require the insurance companies to determine on their own an incentive to offer if you construct a residential property or a commercial property and you build it to this fortified standard. This is a higher level of construction than what your local building code would require. So if you do build to fortified, it's certified as a fortified structure by a licensed home inspector or commercial property inspector that has been through training to recognize this fortified standard. And again, then the insurance company would offer you some type of discount determined by them if you build to this standard. It would also help with reinsurance in areas where insurers have pulled out for whatever reason. Maybe it's a high-risk area. And so that is basically the concept here. We passed this bill last year. It made it to the Senate, and we didn't get it finished on sine die, so we're bringing it back this year and hoping that we can get it done this year. So with that, Mr. Chairman, I'm happy to answer any questions that you might have about this bill.
Leader Gamble, is this exactly the same bill as Chairman Robertson we passed out of this committee?
It's identical.
Okay.
Mm-hmm.
And you're working on this now for, I guess, at least a second year. Have you determined that some insurance companies already have this in place?
So the insurance
discounted or a rating for this type of structure?
The insurance companies do support this, and we've worked with them on this legislation. As far as anyone specifically, I'm not aware, and Emily Engel is here today from Georgia Ready Mix Concrete Association, and I don't know if it's appropriate if you allow public comment at this point, but I would be happy to ask her if she was aware of anything that was currently available, depending on what you would prefer, Mr. Chairman.
I think there is carriers that already are doing this.
Mhm.
I'm pretty sure. You don't know anybody in the concrete business or any family that was in the concrete business?
Used to be, yeah,
Okay, I
used
just
to be.
wondered. But it's not specific to concrete.
No, it
right?
could be accomplished with wood as well, and so it's not material specific.
All right. Chairman Harbison, you have a question
Sorry,
or?
still on from last.
Okay. Vice Chairman.
Yes, sir. Yes, sir. Since this could be steel, could be metal, could be wood, and I'm assuming, and knowing the companies that I deal with as well, they're, especially in coastal leisure areas, things of that nature, we're trying to get a standard that the insurance companies can recognize, because many times they recognize frame, masonry, they don't give you that, and that would give us that, I think, a good piece of legislation, especially as we deal with coastal areas and the markets that are going on right there.
Yes, sir.
Good bill.
Thank you.
Did this not get out of the Senate or not get out of the House last year?
Didn't get out of the Senate.
Okay. Want to know whose fault? We want to blame. Okay.
Well, hey, you know, y'all know the process down here, and the process works, so I'm just gonna leave it at that, so,
All right,
yeah.
All right. Thank you, sir.
Yes, sir.
Any further questions?
Appropriate time.
All right, we have a motion, do pass, LC 520197. And a second. That is the right LC number, right?
That's correct.
Okay. Any, further discussion? All in favor, raise your hand. All right, very good. Now you
Thank
have, who's gonna carry this for you if you get it out of rules?
Randy Robertson will.
Okay. And House Bill 280,
All right, so House Bill 280, so we've been on the property and casualty side of insurance, and now we're going to transition over to life and health. And this bill builds off of something that we did last year. And last year's bill was focused on property and casualty. It allowed a property and casualty insurer to offer a loss mitigation device. So think of a smoke detector, a water leak sensor, something of that nature in the sale of a policy, which had been up to that point prohibited under law. It was considered a rebate or inducement. And so this legislation is focused to life and health, and it would allow life and health insurer to offer a blood pressure cuff, a Fitbit, something again of that type of nature in the sale of a life or health policy. These are small dollar type items. It's currently prohibited, just like it was on last year's legislation in the sale of the policy, but it would allow this, and the value of these products must be reasonable in relation to the premium, and that's outlined in lines 30 through 32. This is a model NAIC bill, and so this is something that other states are starting to adopt as well. Again, the thought there is if you're more aware of your health, whether it be your blood pressure or how many steps you've taken in a day, things like that, that it could potentially help us to lower the risk or minimize the impact of a health situation. So that, in essence, is House Bill 280.
Yeah, I'm a little confused about this because, as you probably know, our state health plan, for example, has a program where you can accumulate points that can lead to discounts on drugs and things like that.
Right.
How
That's
is this
not
different?
that's not offered in the sale of that policy. I mean, you can sign up for that. It's completely voluntary, but this would allow the agent or the company to offer this product to you in the purchase of the policy.
if you did that now without this, it could be considered an inducement because it's part of the, you're inducing the customer to buy the policy with this gift of a Fitbit or something. This would make that not, and inducements are illegal.
That's right.
Sure.
So is there any kind of cap or dollar limit or anything like that that would come into play?
Again, on lines 30 through 32, if you'll look there, it outlines. Now, the insurance commissioner has the oversight of this and will be monitoring this. And Bobby Potter is here today if Bobby has a few things that he would like to add. But again, it has to be reasonable in relation to the cost of the policy. So you couldn't go out and offer someone a $1,000 device of some kind. This has to be small dollar type items in order to fit under the definition of House Bill 280.
Do you have a question?
Yes. in the past, if I remember, gifts were limited to like $100, or there was a dollar amount put in place, as I remember, from that standpoint. And I was thinking, I mean, this could be, I won't say an Apple Watch or whatever that would count your steps, because this is going to life and health. Huh?
An Apple Watch is.
No, yeah, I know.
Right, yeah, that
that's-
wouldn't
that's the
qualify.
part. But I'm
Yeah.
just saying that in the past, there's been limitations upon what could be given from an inducement standpoint. This, and when you say commensurate, could be, and I guess it leaves it open. If it was a $5,000 policy or a $500 policy, that would be determined, am I correct, by the insurance commissioner? Is that what I'm understanding?
So the insurance commissioner will be, has the authority to oversee what items are being offered. And so there are guardrails on this where it would not run into a situation where we would fear, someone had been offered a very expensive item. Again, that's not going to happen because the insurance company would lose money in that case. But the insurance commissioner has the authority to promulgate the rules and regulations that affect these types of items. If I'm not correct, and again, Chairman, I don't want to misspeak, asking Bobby. I know Bobby's here today. I've worked with him on this bill, and I'm happy for him to come forward and answer anything that y'all might have that I might not be able to answer today.
But in my comments is there's not a dollar limitation that would be determined by the rules of the commissioner or some guidelines from the commissioner, where in the past, there's always been some kind of dollar amount that's always been laid in place.
That's my understanding, yeah.
Okay, and this
Yeah.
is model legislation, which is coming from the National Association of Insurance Commissioners.
Correct.
So it's, do you know if it's in other states already, or does?
It has been adopted in other states, and I'm not exactly sure which ones, but I know it's starting to pop up in other
Okay.
states.
Bobby,
Thank you.
Mr. Potter, come up to the mic. And so, Leader Gamble, when you passed this for property and casualty a year or two ago, went all the way through, right?
It did.
To the finish line. Did we put a dollar amount on that bill, or was it same type language?
It was the same type language.
Yeah, this was the language from last year
Okay.
that was referenced at line 30 through 32. So that was in the property and casualty world. The only omission from that was this life language at the top of page 3. So all this does is glom on to what was passed last year with all the procedures in place with the oversight of the Department of Insurance. This would just add the life insurance world to the NAIC model. It really just completes the model.
What's mentioned specifically is something in that category.
Yes,
That's
sir.
right.
Chairman Kirkpatrick, you have a question?
I'm sorry, just trying to understand what we're doing here. I'm looking down at the part about the commissioner, and I'm not seeing anything about the commissioner doing rules. All I'm seeing is that the commissioner has to be notified before implementing the program and may proceed unless the commissioner injects within 21 days. Is there any place else in here that has the commissioner writing rules? I thought I heard you say rules, but I don't see it in the bill.
So I could ask the department, but the department routinely will review any bill that has passed from a legislative standpoint, and if rules are necessary, they pass rules or regulations to complement that and to provide flesh.
So does line 26 through 29 address it maybe to your satisfaction?
It says produce upon request. I just know because I work on insurance legislation a lot that we usually do give the commissioner the authority to promulgate rules, or we tell them that they should promulgate rules. I'm not objecting to the way it's written. I'm just asking.
Right. I'm fairly confident sitting right here that the commissioner has the authority right now to promulgate these rules for this and any other legislation passes in their world.
And that is correct. Now, we've already done this from last year for the PNC side, and they have a year of experience now having dealt with that. I would be happy to ask the insurance department to speak to that. I know they're here today, if it would be the committee's wish. But, again, this is something that they do have oversight over.
All right, so, Weston, do you want to speak to this, or you prepared to speak to this?
I'm not prepared to speak to this today, Mr. Chairman. I know that to Representative Gamble's point, you know, the other proposed bill has been put in place for a year. I haven't heard any concerns from our folks. I can find out, you know, if there's, I can follow back.
Okay.
Looks like they have to, with, according to the law, the language, they have to, you know, get approval from us before they put it in place, I believe, so. And that needs to all be done on front end, we just take a look at it and make sure we're on the objection.
All right, any further questions? So we are gonna meet on the 22nd. Do y'all wanna get clarification from the Commissioner's office before we, on the 22nd? Or do you, what's the will of the committee on this one?
To the content of the bill, but I would like, since we do have experience now for a short period of time, I think it'd be wise to kind of see how that's going before we add on to it. Just my opinion.
Certainly.
Leader Gamma, would that place the undue burden on you to come back with some, get with the Commissioner's office and maybe get us some information that would help make us a little more comfortable with this?
I'd be glad to do that. If that would get you more comfortable with it, that's not a problem at all.
And if you have any, you know, different language or anything, you want to really spell it out that it's subject to the rules and regs of the Commissioner. That's the thought. So,
Okay.
well, we won't take any action. This will just be a hearing only today on this bill, but I'll put you on the calendar for the 22nd.
Thank you. I appreciate that. And
Okay.
we'll come back.
Thanks, Chairman.
All right, we have a, I'm gonna take the chairman's prerogative to have it, let Representative Henderson tell us about her bill. It's not on the agenda. She's got, we're just gonna be a hearing only.
No, sir, hopefully a vote. as
Hopefully a
well.
vote. Well,
Yes, sir.
We'll see.
Yes, sir.
Okay. We have a quorum. Let's, I'm trying to squeeze you in here, so be quick with this,
Thank you,
please.
Chair
Yes,
Walker.
ma'am.
Yes, thank you for allowing me to speak on this bill. HB 384, prostate cancer is the second leading cause of death among men in Georgia. This year, over 7,000 men are going to be diagnosed with prostate cancer. Over 900 will lose their lives to prostate cancer. Therefore, it's very important to get a PSA test done yearly. This bill HB 384, insurance companies will send notifications to men recommending having a PSA test done upon reaching age 45, age 40 if there's a family history. And this bill is just simply adding to the bill that I did previously last year for women sending notifications to women, reminding them to have their mammograms done once a year to avoid having breast cancer. Early detection is key. Early detection saves lives. And this bill that I did last year, Governor Kemp did sign into law for sending notifications to women to have notifications to remind them about having a mammogram yearly. This bill is just adding men to the bucket where they would be sent notification as well for reminder of prostate cancer, having a PSA test done once per year upon reaching age 45.
All right, I have a question, Chairman Kirkpatrick.
Thank you, Mr. Chair. My question is, the ages that are in the bill are based on what? National guidelines from somewhere?
American Cancer Society.
Okay.
Yes, ma'am. That's the age that they suggested, age 45, otherwise age 40 if there's a family history.
Yes, sir, Senator Harmon.
Yes, ma'am, thank you. Interesting that they're thinking about guys now. I appreciate that.
Yes, sir.
From that standpoint. Curious, is the notification not specific? Is there's a cost to that notification? Didn't know if that was present in anything here. Also, is the notification electronic, or is it by mail, or is that defined in any place?
The notification is electronic because these are actual insurers that are either through their employer insured or whatever, through their job. So the electronic notice does go out upon reaching age 45 for men.
So from
And
a
it is
cost-
electronic. And it's not costly to,
Costly because
right,
it's just
exactly.
money.
There's not a physical note attached.
Okay.
Because it's already being done for women. Like I said, the bill that the governor signed into law for me last year,
Okay.
women are getting their notices, and men will get a notice as well. So there's no cost to it at all. Yes, sir. It's just life-saving.
Thank you for
Some in
thinking
the-
about guys. We appreciate that.
Thank you.
Senator Harbin?
Yes. Thank you, Mr. Chairman. Being that it seemed to be straightforward and to be dealing with equality and make sure we men get the same thing as the ladies, I would like to see it move to rules at least so we can contemplate passing it, because I think it's a good a bill to look out for our health.
Thank you, Senator.
All right, Senator Lucas or Senator
Ms.
Merritt?
Merritt, I was just going to say the same. We always want more preventative care, and if, as much as we can get ahead of people's health care and identifying underlying conditions, we should do it.
Yeah.
I would move as well if
Thank you so much,
we
Senator
move past
Merritt.
the hearing.
Uh,
Vote.
Is there anybody here, you may know, Representative, but a lot of screenings, especially since Affordable Care Act came out and changes over the years with the health insurance, a lot of screenings are mandated to be covered without a deductible, that kind of thing. What age? I think prostate screenings probably fall into that category. Do you know if they do, or?
The age for the prostate check is, for the PSA test, is age 45. Age 40, if they have a family history, recommended by their physician to get
My
a PSA
question
test.
is that mandated to be covered in some other code section or some other part of the law as a, just like mammograms are?
Right.
I was thinking it was age 50, but.
Right. According to their insurance, they would have a copay, or depending on their insurance, either Kaiser Permanente or Cigna or Blue Cross Blue Shield. So the actual person that's insured may have a copay. However, this bill is actually just sending notifications so that you can go and get tested. And as a reminder, as a lifesaver.
Okay.
I'm in the mission for saving lives, because early detection saved my life. I'm a breast cancer survivor. Like I said, Governor Kemp signed my bill into law for early detection breast cancer for women. So I'm just piggybacking on the same bill to
All
get
right.
men.
Did anybody, have you had any resistance to this in the House where the insurance companies?
It was voted in unanimously. I even
Nobody
had,
spoke against it or raised any concerns? Or?
no, we had about, the Speaker Burns had to stop some of my colleagues from asking questions and making comments, positive comments toward the bill, because they had family members that are either going through it or had been through it and are now deceased because they didn't get early detection.
Okay.
So there were several ones in the House that made comments, positive comments. So Speaker Burns said, we've already got 10 for Ms. Henderson. Those are, they were going on and on and on, raving reviews from the bill,
Okay,
about
well,
the
this
bill.
is what I'm gonna do. It wasn't on the agenda. We took it off because we felt like we weren't gonna have time to
Mhm.
hear it, and because of your appointment that you got next week.
Yes, sir.
Now we've heard it, we understand it, it's very straightforward. I'm gonna put it on the agenda on the 22nd for a vote. You don't have to come, one of us can explain it, we know what it does. You're welcome to come, but you can go ahead and do your appointment the 22nd, and we'll vote on it then. But I don't think it's fair, since it wasn't on the agenda, to hold a vote today.
Yes, sir.
But I appreciate it. Thanks for bringing this to us.
Yes, sir.
All
Thank you,
right.
Chair Walker
Any other business?
and committee.
Okay. All right. Thank you all. Meeting adjourned.
Curious.